Return on investment, amount made divided by amount invested. This is a simple concept. By the way, none of real estate is really complex. Most of it's all pretty simple. It's just how many layers of items did they stack up in order to get there, right? So you can break down just about any type of real estate. $100 stock that sells for $120 means you got a $20 profit. We're all okay with that, right? And $20 profit divided by the $100 it took for you to get that profit is your return on investment. Everybody good with that? All right, then we're going to jump into a little bit more. Here's another component you need to know is how long did you hold that property? So if you held that property for less than a year, you're getting short-term capital gains. If you held it for more than a year, you're getting long-term capital gains. Now, you're not a tax expert and you're not going to give tax advice. However, you should understand your client's position. Is your client up here where they only make $20,000 a year? They probably aren't buying an income property, right? Down here, they might very well be in this category, $77,000. They're probably owning an income property. And if you look over here, if they sell that income property less than a year, they'll pay 12% on their taxes, right? That could be just about anybody. That could be a grandma on Social Security, and she sells that duplex, she's going to pay 12% of taxes. You want to save her more than your commission? You want to earn your commission? Talk her into holding it for at least a year. Don't flip it. Hold it for a year, okay? Then she pays nothing, right? You want another situation there? You got somebody that's tight on income? Maybe they don't want to sell it outright. Maybe they want to take structured payments. Maybe they should take payments over 3 years because it saves them $12,000 in taxes. Okay? They don't have to pay that 12%. If they take those payments and it keeps them down into that price range, then that might help them out. Everybody understand that? So be aware of these numbers. When you get down into these numbers up here, you might say, well, I don't have any clients that make $400,000. My clients don't make $400,000 a year. They might have the year they sold the house because they made $200,000 in profit, right? Remember, we're not talking about owner-occupied houses. We're talking about investment houses. Owner-occupied, they already get an exclusion if they've been there for 2 out of the last 5 years. You don't have to worry about it. But over here, that's a 20% profit that they lost. They paid Uncle Sam 20% that they didn't have to pay him if their agent had told them to be a little bit more selective with what they do. Maybe they could have done a 1031 exchange. That would have been really helpful, right? Information to know if they were planning on reinvesting that money. Or maybe they just took a structured payment and kept their numbers down. Everybody good with that? By the way, when you're out there talking, thank Donald Trump. He brought those numbers way down. This side right here for short-term capital gains and this side over here was much higher before. So until that tax change came, is what happens when you put a real estate guy into the office. He took real good advantage of that. His retirement will be great, quite different based on that.